I know with this last interest rate increase and potentially more rolling out in 2023 has had a lot of people asking, can I afford my mortgage? So I know it's been a rough year and it's likely going to continue into early 2023 at the very least. So today we're going to talk about interest rates, house prices, and what you can do if you're feeling the pressure from rising interest rates. So before we get started, I'm Stephanie Nause with the Homeplicity Realty Group here at Keller Williams, and I'm passionate about helping our clients build and develop wealth through real estate. If you're interested in tips on buying a home, selling a home, or investing in Toronto real estate, I hope that you will consider subscribing to our channel. If you enjoy these kind of market updates or interest rate updates, go ahead and give the video a like. Now let's get into it. The Bank of Canada has increased interest rates this year an unprecedented 7 times. That's a lot. The overnight rate is currently sitting at 4.25%, which is up 50 basis points from the previous hike. The next Bank of Canada rate announcement is scheduled for January 25th of 2023. Pretty much all the experts that we've talked to have indicated to expect at least one more interest rate increase. They seem to be split on whether or not we'll see something small or if we'll see something a little bit larger. This 0.5% interest rate increase that we saw December 7th, this past week, that was more than people were expected. So it just shows the level of seriousness on getting inflation under control, because the bank typically doesn't even increase interest rates at all in December, but they really want to stop people from spending and get inflation down. And the holiday season is typically a spendier time of year, so that should likely curb that. And I think it's important to note that inflation is still at an all-time high. And all you have to do is take a look at some of the charities that we typically support. They've all been sending out urgent messages. There's an increase of families that are looking for donations, and the cost of inflation for food has made it harder for them to support even the existing families that they already had. So if you're in a position that you would be able to make a donation this year to help out some of these local charities or some of your local charities, if you live in Toronto, we're going to go ahead and put some links in the description below. If you're in a position that you would be able to make a donation, I know that it would be really appreciated. When we see inflation up, it definitely erodes purchasing power as well as negatively impacts more the lower income families in our area. I think it's important to note that this era of free borrowing or super low interest rate borrowing and insane surges in home prices, that's probably not going to be seen again in our lifetime. And this was a situation created by the pandemic that was never going to last forever. We're likely going to see home prices continue to trend in the 4 to 7% growth per year. And we did a video actually last week on the state of the market and where home prices are sitting. So we'll link that up here if you want to take a look at that one. But we'll likely see interest rates potentially coming up a little bit more and then maybe coming back down into Q3. We'll have to wait and see. But we're definitely not going to be seeing like 1% interest rates, 2% interest rates for a long time. Maybe never again in our lifetime. So let's get back to the people with mortgages that are coming up for renewal or who have existing mortgages. If you have locked in to a fixed interest rate for the foreseeable future, then you likely won't be impacted by these rate increases at all for the next little bit. And if you are in a variable rate like me, you will see that the variable rate is likely going to go from 5.95% up to 6.45%. What this looks like is about an extra $36 a month in carrying costs for every $100,000 that you're borrowing. I hope that makes sense. And there are some signs that these rate increases are going to be coming to a halt. Like I mentioned earlier, we will likely see another one coming into the new year, but the 5-year bond rate is coming down, and this is typically reflected in 5-year fixed mortgage rates. And while that is not great news for the economy, it does look like inflation is coming down, but there also are a lot of signs that Canada is trending towards a recession. Fortunately, like the 1980s, we're not going to see those 18-20% interest rates. And because we have so many baby boomers aging out of the job market, it will create job opportunities, which will have people coming in for immigration and make Toronto a very desirable place to be living, and it will keep the unemployment numbers low. So that will certainly help. But what do you do to manage some of these rate increases? If you're someone like myself, especially who is in a variable rate, about half of the variable rate holders right now have already hit their trigger rate. If that's happened to you, or if you're nearing that number, then you just will want to reach out to your trusted mortgage advisor. A lot of the lenders will be reaching out to try and work with you to come up with a solution on this. And there are things that you could be doing, like extending your amortization, locking into a fixed rate, increasing your monthly payments, putting down a lump sum payment, or even locking in your rate. We've had a few of our clients look into some of these strategies and implement them, and they've also done things like renting out their basement apartment like I do to help offset some of the cost and get some of their extra expenses covered. Or some of our clients that have a spare room in their condo have been looking at roommates and renting those out. Or we've even seen some of our clients who just aren't comfortable with the payments, but they don't want to exit the market, moving into a space with a partner or moving in with parents. And because the rental rates are so high, to rent out their existing property and just maintain it that way. Obviously, nobody has a crystal ball, and I do think that we can expect to see at least one more rate increase coming into the new year. Like I said, there's been speculation of another 0.25% increase, or potentially something heftier, whatever that means. So, and then hopefully towards the end of 2023, we will start to see rates stabilize into the middle of the year and even potentially come down a little bit towards the end of the year. So I know it's been a tough year for home borrowers, but if you manage to get into the market and beat the pre-qualification, like the tightening of the lending criteria, then hang in there. If there's anything that we can do to help, or you have any questions, feel free to reach out, and we're more than happy to connect you with some of our trusted mortgage advisors. If you've made it to the end, thanks for watching. If you enjoyed this video, go ahead and give us a like. I hope you'll consider subscribing to our channel, and you can head over to Instagram, Facebook at Homeplicity Realty for a lot of content that we don't post here on YouTube. Thanks again. See you next week.